Hello everyone. Today I have something truly amazing to share with you. I believe we are on the edge of the change of a new cycle that most are failing to see. After watching this video, I promise you'll be way ahead of the curve, and I believe it will change the way you approach these assets, whether you are into stocks, precious metals, oil, or Bitcoin. It also might change the plan you had until now, so let's get to it. Before we start, guys, I wanted to share an absolutely amazing project I'm currently part of. It's called Because Bitcoin. And why should you care? Well, first of all, we run spaces on the X platform nearly every day. There is so many great hosts. We discuss so much awesome stuff about the markets that you want to know ahead of the bull cycle and so. Also, if you're gonna go on the becausebitcoin.com site and you're gonna head into the premium section, I write articles there about crypto equities and generally the markets. I write alongside other admin crew members that share their alpha knowledge with you, and it's exactly the type of knowledge that you wanna know at times like these. If this does interest you, you can join in for a very cheap price, and if you're gonna use the code CHECKIS, you're gonna get a lifetime minus 10% discount. So, in my opinion, totally worth it. I'm also currently partnered with Bybit, so if you guys want to receive some nice discount on the fees for the next 60 days and also support the work I do for free for you guys, then be sure to use the link I have in description or on my profile, or just simply type the referral code Jackis. I'm absolutely fascinated with what I have found recently and the opportunity it presents to all of us. If we look at both gold and SPX, if we look at these two charts, what do we see? You know, just sort of uptrend over the years, right? It seems rather random, you could say. But if we get a closer look, we will find out that there is something more going on, and this is exactly what I want to show you today. What I have found out is that both commodities and stocks periodically change their uptrends and downtrends. And if you are able to spot these changes, you will profit immensely. Okay, let's start with the 50s. In the 50s, we had a nice bull run in the stock market, and it lasted until 70s. In that time, we had a sideways commodities market. Obviously, there was the Bretton Woods system, and so the gold was kept at $35 back then. But even if you would look at other commodities, you would see that there was sort of sideways downtrend and so forth in that time. In 71, the stocks entered a period of stagflation. This period lasted nearly a decade. And in that time, what do we see? We see that gold started to rally upwards. And what is amazing here, how precise these cycles are. So we see the top in 1980s on gold, right? That's exactly the time when stocks stopped going sideways and started a new uptrend that lasted till the millennia, right? So we see a new uptrend in stocks. It's going up, up, up all the way until the dot-com bubble. And what do we see in gold? It's going down since 1980s, this entire time. Okay? What do we see after the dot-com bubble? The stocks start to go sideways. And what does the gold do? It's entered a new bull run. Right when stock stopped in the dot-com bubble is when gold started to go up. It goes up until the 2012, and that's exactly the point when stocks entered a new bull market that lasted another decade. And what does gold do in that time? It goes sideways. And because of reasons I'm gonna mention going forward, I believe we are entering a new phase of this phenomenon, and we will see sideways in in stocks for this decade. And I believe we are entering a new bull market for gold and commodities in general. And then obviously this cycle will repeat going forward. Now let's say you were born around 30s, you got in your 20s and you bought SPX, in the 50s. And let's say you held until now and you would give your children your SPX and it made an amazing, let's say 20,000% upside since then. Really amazing, in one's life. Obviously, it would have to be inflation adjusted, blah blah blah. That's not the point here. If you did the same in gold, you would get around 5, 6,000%, something like that. Both amazing, right? Yes, but now imagine that you know what you now know, that these cycles change and that you can profit on both of them. Okay, so let's say that you held, in your 50s and you held until 70s, you had SPX. And what you then do is you flip into gold or commodities, right? So here you flipped into gold and you held till then. Then you sold your gold and you held stocks. Then you held stocks until the dot-com bubble, you sold, and you held commodities. Then you again sold gold and you bought the stocks. Okay? So what this does is that it actually keeps you in a constant bull market. And if you did this, so as we explained before, on SPX you made around 20,000%. On gold you made around 6,000%. But if you did this little flip, every decade or so, or maybe 2 decades, you did an amazing 600,000%. And obviously, this is not that realistic in one's lifetime. Maybe you're gonna catch one, two, maybe three, maybe even four of these cycles in your life. But still, knowing when we are about to start one and understand that these constantly change is super beneficial. So you don't spend an entire decade in a sideways action, and that's in the better case where you just hold and you don't sell, right? You don't panic sell during 2008 and so forth. Now if we add all the major commodities, other commodities like silver, copper, oil, and if we blend them over the gold chart, we realize that more or less, these move exactly together in very similar cycles. Yes, there are few differences, here and there. Sometimes, silver goes first, sometimes gold goes first, sometimes it's copper and so forth. There is also, local demands, local shortages during each time, but the general idea is that they all move together. So if we want to understand where commodities are going, we need to look at each of them. Another amazing thing is when we take the dollar index and we place it on top of the gold chart. At the first look, we don't really see anything, that would give us any information. But we need to understand that all these charts are denominated in dollars. So the dollar index obviously does matter on these. And what we need to do is actually inverse the dollar index chart. And then we can start to see the similarities. So for example, if we go and overlay this with the 71 run, we can see a clear shape, here, where the dollar index, because it's inverted now, was falling, so the gold was rising. Then we see a rise in the dollar index and we see a drop in the gold price. Then we see another sharp sell-off in the dollar index and we see the rise in gold. Then what we see is a huge rise in the dollar index and we see a bear market for gold. But again, we can see that measuring, these markets against each other, how beneficial it can be. Okay, we can clearly see that it's not one-to-one exactly, but measuring these on a higher time frame scale, taking these intermarkets and measuring them against each other, it's what I call intermarket analysis on the higher time frame. We can clearly see how this is beneficial to use. So for example, gold here makes a local bottom, okay? The dollar starts dropping a lot, and then we see the we see the spike here overlay. Then we see a uptrend. We see an uptrend here in the dollar index, and then exactly when the dollar index stops is when gold bottoms. Gold starts to run higher, and what happens? The dollar index bottoms and it starts to go up. We've been in an upward trend since 2011, 2012, sort of. And what does gold do? It sort of goes sideways. The reason why I think, by the way, gold is not going down in this decade and it's rather going sideways or slightly up is because all the currency creation we have seen in the past decade. Plus, there has been a huge accumulation of gold by the central bankers and the people and institutions, I believe. And we see that on the chart. If we have a look here, we can see that central bankers were selling, for quite some time, and now they have started to buy in this past decade, which is right here, which is the accumulation period. And just last year, we have seen the largest accumulation since the 50s. Is it a coincidence now that we are probably heading into a new cycle? I think not. Now let's see if the chart lines up for the next decade with the dollar index as well, because all of these need to fit together. There is no higher time frame than this, so if one chart says something, the other must say that too, otherwise it would not work. So what do we see in the dollar index, right? It's inverted. So this entire decade, the dollar index has been going upwards because it's inverted in this channel. And I was saying that ahead of time, I was saying that the dollar index is gonna top right here at around these levels, where it's confluent with the supply and it's also confluent with this channel, this higher time frame channel. Back then, there were so many people saying how the dollar is gonna consume all the other currencies and everyone is gonna go, to the dollar, and dollar is gonna go to the moon. And obviously nowadays we know it wasn't the case. But the key thing is knowing it ahead. Everyone's genius in hindsight, but we wanna know what's gonna happen ahead, right? So here is my take. I believe if gold is supposed to go up in this decade, that means that the dollar index must be going down. Once again, inverted chart, so up means down. I believe we're gonna see that because we have just bounced from this higher time frame supply and we are in this, higher time frame channel that we have just bounced off. I believe we're gonna see a move higher in this channel respecting it, and then we're gonna break higher. And I don't know how high exactly we're gonna go. This is a certain important level that the price will probably respect, but it could be higher. But I definitely see us going at least here. If that happens and the dollar index keeps going up in this time, that will certainly mean that gold is gonna be going up as well in this time period. So again, another confluence. Now in this decade, something truly remarkable happened. We as humans have discovered a new commodity, a digital commodity. It's called Bitcoin. Even the CFTC, the US regulator, has confirmed and classified BTC as a commodity. And I will go into exactly why I think BTC is a digital commodity above anything else. I understand that to some of you it might be a perception change, but I want you to understand this. Some people look at gold or silver and they see different things. Some people will look at silver and see a money. You can take the coin, pay for goods and services, it's money, the silver coin. Some people will look at silver and see a jewelry. Some people will look at silver and they will see an industrial material, right? Some people will see it as a store of value. The thing is, it's a commodity and it means something else to each of us. Now let's have a look at Bitcoin. It's such a new technology. such a new commodity. And let's have a look. What does it represent for people? Some people look at Bitcoin and they see money. You can buy stuff with Bitcoin. Some people will look at Bitcoin and they will see something that nobody else can confiscate, that they can send anywhere in the world in an instant. Some people will look at Bitcoin and see it and use it as a platform to store their NFTs, on ordinals. Some people will see it as a store of value. They don't want to pay with Bitcoin, they just want to store their wealth in it. And truth be told, who knows what other usages Bitcoin will find in the future? We don't know yet. The thing is, it's a digital commodity. It has so many use cases, just like all the others. And this is the reason why BTC will always hold its value. Obviously, there could be some bug in the code and completely crash this new commodity down. It's possible, but the chances are basically close to zero nowadays. And each year, these probabilities decrease more and more towards zero. So Bitcoin is here to stay as a new digital commodity. And who knows what other usages we find for it. In the first decade of Bitcoin, we are seeing a real adoption. The market is trying to understand what Bitcoin really is and try to find its fair value. There was a price discovery, and I believe nowadays we have finally found it. Many people think that Bitcoin trades as another tech stock or something like that, and it's not true. Bitcoin is a digital commodity, trades like commodity, and I will show you proof that nowadays BTC trades that, and it will continue to do so. And this is also the reason why I believe that Bitcoin is the biggest opportunity for this decade. Because if we understand that commodities are heading into a new bull market for this decade, and BTC is a digital commodity, and it has the lowest market cap of all the other commodities, it will obviously run the hardest. There is still an adoption to be done by the whole world. Not many are familiar with what I'm trying to explain to you right now. Right now, you are ahead of the curve of everyone. Now, if we get a closer look between Bitcoin, silver, copper, we are starting to see they are beginning to trade like one another. There are a few differences, here and there. Sometimes one goes first, sometimes the other goes first, but sooner or later they follow up each other. So if you really want to understand where BTC is going, understand where commodities are going. There can be a short-term difference in price, just like the one we've seen during FTX when an unexpected event comes into the market, but then the price quickly recovers. If we get a closer look between Bitcoin and copper, we can see how closely correlated they are. There are differences, sometimes one takes high, sometimes the other doesn't, but more or less on the higher time frame they move together. What we need to understand is that there are certain differences in local timings. So for example, sometimes one can have way quicker demand for it, or there is some impulse coming in that market. But in general, we need to understand that they are classified as commodities together. So for example, here we see, during the 16, 17, we see bull market in copper. We also see bull market in BTC. And what happens? BTC tops, copper tops. Then we see a bear market in copper, and it lasted until, COVID. BTC at the time was stronger. It did not go as low as copper has. Sure it could have, but there was a strong demand in BTC. This time I'll use silver for the correlation. So as we can see, the price was making a floor on both silver and BTC, the infamous 6K bottom. And then what do we see? Silver starts to drop a lot from that floor. What does BTC do? It keeps going sideways, but then later on catches up. It starts to accumulate and then is the first to start moving upwards a lot. What does silver do? It does create a bounce higher, but then drops and then follows BTC on the upside. It's pretty clear. Then what do we get? We get sort of sideways downward movement, and then COVID comes, and both obviously reject. Now, absolutely amazing. What happens after COVID? Silver is the first commodity to run really high, really fast, but then stops and goes sideways till then. What happens? The truth is, silver is waiting for other commodities to catch up. What does Bitcoin do? It goes sideways and then catches up on silver. Then we have the sort of 60k, 30k distribution on BTC. We see the same for silver, and then 2020-22 come April, and we see the large sell-off. There is the sell-off, and then there is the bottom. What happens during the bottom? Okay, so silver goes sideways and bottoms. BTC since June 22 goes sideways and bottoms. Okay, we had one deviation in that market, in BTC market because of FTX. It was an unexpected news to the market. The market dropped. But what happens after? Everything gets absorbed, and then the price rallies and catches up on silver. So silver went up and then started to distribute this local leg. What does BTC do? It distributes, silver drops first, BTC catches up on the downside later on. Then we see the US banking collapse in March 23, and both silver, both BTC, gold, copper, they started to go upwards. Then we see the price starts to go down. We see BTC price starts to go down. And what happens? BTC starts to front run. It goes upward first. And some could say, BTC was going up here, silver was going down here. It doesn't work. No, it does, but you need to understand that each market has their own problems, its own demand, its own supply on its own, sort of. But on the higher time frame charts, these move together. So BTC was front running, it went up, and then we see larger distribution. So what does silver do? It catches up, goes upside, and then quickly down. Here silver front run BTC on the downside, and then BTC followed. What do we see after? At the current price, silver started to go up ahead of BTC. What does BTC do? It now caught up and started to go up as well. So this correlation is absolutely undeniable. Now, because of what we explained in the beginning, I believe we are on the verge of a new cycle for commodities. And if I look at all of them, I see them all being squeezed in a very tight compression range. If you look at all these VWAPs currently, whether we drag them from the bottom of 2008 or the top in 2011 or the local bottoms or the local tops, they are all pretty squeezed and they are waiting for that big impulse. The same thing with copper. If you look at copper, we see how all the VWAPs, even the price is getting compressed right in this point. And the same thing is with BTC, with the VWAPs from the 2021 top, from the local bottom, and we are also following the long-term cycle VWAPs as well. Just as the historical volatility is hitting the historical lows. This is not a coincidence. Now, if we go back to silver, you can see how on this 2-decade long chart, the chart is getting compressed on the logarithmic trend. And I believe the breakout is getting very close. We are also seeing the same thing with gold. It is also getting compressed. And what I believe is that some big trigger in the world will come, and it will make the commodities break out and start their bullish trend. I don't know what it's gonna be. There are the rumors of the BRICS countries backing their new currency with gold or maybe with a basket of commodities. It can be some problem in the fiat world, could be some insane printing, who knows? But I know from all these charts, something's coming into the market, something's gonna be the trigger, and something is gonna make these go into a bull market. In the past decade, we have seen that the passive management was beating the active one in the stock market. And I believe This is going to change in the next years. So if everyone is saying the passive portfolios are beating the active ones, I believe most people will start moving into the passive ones. And it's gonna be the opposite, you know. We are at the peak of this decade cycle where passive ones were beating active ones. I believe it's gonna switch and then it's gonna switch again. And with the information you were provided today, you are able to see these changes and know when it's good to be active in one asset class and when it's good to be passive. And I believe in stock market it's good to be active now, and in commodities it will be good to be passive trader. I also think we are heading to a new era of the oil prices. I was calling for the top in oil prices in June 2022. That was right when the Ukraine-Russia war started, and everyone was saying, you know, there is a war and the oil prices are gonna go to heavens. And based on the intermarket analysis, silver and BTC and copper were already trading down, and I knew that oil is lagging and it's gonna come back down. And back then, once again, everyone told me, no, 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 you cannot look at it that way because, you know, this and this. And the intermarket analysis is everything. And I was predicting that we're gonna fall, we're gonna bottom around this area. You know, it's all on my X profile, if we can call it that way nowadays. And I believe we are just starting a new era here. If you look at all the commodities, they have very similar market structure. You know, they had the accumulation prior to COVID, then the COVID shakeout, then impulsive like higher. Now we are pulling back, you know, to the equilibrium, and I believe now there is going to be a shock coming, and we're going to see higher prices. So now you might be thinking, okay, Jekis, but you know, if gold is going up and silver is going up and oil is going up and all the commodities, why Bitcoin? You know, and I believe the answer lies in its market cap, amongst other things. So if Bitcoin is this new digital commodity and the world is still trying to find its fair value and pricing in it, and there is the adoption of BTC in the world, it still has this low market cap currently sitting at 500 billion. But where are the others? You know, silver sitting at 1.5 trillion, gold sitting at 13 trillion market cap. The lower the market cap, the higher the percentages of the moves, and the vice versa, higher the market cap, lower the price move. So if you want to play it more conservatively, then you obviously should allocate more to the higher market cap assets. The highest market cap commodity is actually oil, it's not gold. I believe it will have the lowest percentages increase, but it still will be big to shock people. The next will be gold, silver, and obviously the next one is going to be Bitcoin. Now let's do a mental exercise of how far we can expect prices to go. Let's start with the highest market cap commodity, which is oil. I believe it's gonna go above 200, which is gonna be large price increase, but it's gonna be around from the current prices to around 200% price increase. In my opinion, these prices make sense. It will probably cause the world looking for a new energy resource other than oil, and that will be interesting to observe. As for gold, as the second largest commodity, I think we're gonna go to 5 digits this cycle. If you look at the past cycles, we went from 2 digits to 3 digits to 4 digits, and I believe this cycle will be 5 digits. Obviously, each cycle is getting smaller than the past one. I believe this is going to be the same for BTC as well, but I still believe there is going to be a huge large increase in BTC because most people are not understanding that BTC is heading into the decade of commodities. So my estimate for gold is that if oil is going up about 200%, and if I think that gold is going to 5 digits, that's an approximate rise of 500% from the current prices, something like that. Again, as I was saying, higher market cap, lower price increases. Lower market cap, higher price increases. For silver, I believe the price increase will be way larger than for gold and obviously oil. I believe we are in this sort of really high time frame cup and handle formation, if you can call it that way, and we will see silver going to 3 digits in this cycle, maybe something like, I don't know, 200, 300, something like that. We cannot really say the price discovery, but it's gonna be big. If you want to know how high BTC can go in this decade of commodities, then we need to understand how high silver can go in this decade of commodities. If we do understand that, then we can use the estimate of lower market cap of BTC onto silver, and then we could get a nice idea. To get an idea, let's have a look how high silver went after the COVID crash versus how high BTC went after the COVID crash. We're gonna use the bodies because the VIX can be a little bit misleading. So if we look, we can see that silver went sort of 100% upside, right? So we see the upside together, then the drop, and then the potential upside that is gonna follow. If we're gonna look at BTC, we see that BTC made basically 1000%, give or take. Let's do it like this, okay? So we can see that BTC went 10 times what silver has. So if we understand that silver went 100% after COVID and BTC went 1000%, and if we understand that silver will most likely hit new all-time high in this decade of commodities, which is like very probable, that is 180% from the lows. So if we want to extrapolate that number onto BTC and understand it's about 10 times more, we take it and do 1850%. So what number does that give us? That gives us around $300,000. If we're gonna think that silver in this decade of commodities is gonna go above $150, let's say, that's 800% or 750, that would mean 7,500% for BTC. So where does that leave the price? It's above $1 million by 2030. Now I understand that these numbers may sound crazy, especially ahead. It's always unimaginable this is gonna happen, but we've seen the same thing repeat, in the past decades for silver, for gold, and for the others. And 10 years is a lot of time for BTC to make such price increase, even if it seems sort of unrealistic at the moment. Another argument is that if BTC is gonna consume the gold's market cap or come at least very close to it, the current market cap of gold is sitting at $600,000 for BTC. If there is gonna be price increase in gold, that means that the market cap is gonna be way higher. So let's assume this idea that BTC is gonna go to same or similar market cap of gold. Current gold market cap is sitting at $600,000 per BTC. If the gold price is gonna double, which means going to $4,000, $6,000 or something like that, that means that the market cap for BTC to match gold would have to be around 1,200,000, and guess what? That's exactly the numbers we've come up here with. So once again, I don't want to create any crazy hype here, but also want you to understand that these numbers are not so unrealistic, especially if we're gonna see some insane money printing in this decade. I believe that most people are in for a big surprise because we had this narrative of decreasing price increases with each cycle. And while that has been true and still could, I believe BTC as new commodity will continue with the rest of them and will be in a uptrend for this entire decade, as there is a global major adoption of this new technology. Thank you for watching this video till the end. You are now one of very few people in the world to know about this stuff, so make the best use of it. There is something I'd like to ask you though. I do these videos for free for you guys, and it took me days to put together, believe it or not. Not to mention my personal experience from so many years I've been involved in the markets. The least you can do is like and share this video. Share it with your friends and family to help them out. But also, do you know of someone that is a gold bug and is ignoring Bitcoin? Send it to them. Do you know someone that is into stocks and is expecting a new bull market? Send it to them. Do you know someone that is bearish on Bitcoin but bullish on gold and silver? Send it to them. Let them argue these facts I presented and what they think of it. Also, do not forget to hit that follow or subscribe button if you enjoy my content. Stay tuned and may the markets be kind to you.